Well, all right. You made it. I mean, this is the last lesson of Accounting 2. And, you should kind of give yourself a pat on the back, I think. It's not an easy course, and it's a long course, and it's a lot of time, and congratulations. I think it will pay off for you. However, I have not left you a very easy last lesson. Health insurance for S-corps is tricky. So we're going to get into some details of this, and the reality is you may need to watch this video a couple of times. Let me start by saying this is not a video about how to handle sole proprietorship or partnership health insurance. Although they do have kind of a similar workflow, at least the partnership does. The rules still can be very different, so you only want to apply this to S corporations. Also, much of this does not make a ton of logical sense. So it's one of those tax ideas where you need really get into where you're memorizing the process and not trying to logic it out, because this set of rules doesn't really follow a large amount of logic. It's just kind of the way that the tax code is written. And so we have to follow it and try and do our best to make sure that we have all of our bases covered. So with that, let me jump in and kind of give you an overview of what we're going to be talking about here. So when it comes to health insurance, the plan, the thing we're trying to get at is business owners want to be able to deduct it. And I can tell you this, sole proprietorships have it much easier when it comes to deducting health insurance. Doesn't mean they get a better deduction or anything, it's just easier. As long as they, talking about sole proprietorships, as long as they are the only ones on the plan, they deduct it on the first page of the Form 1040. I've put a picture on this slide of kind of where the self-employed health insurance deduction goes and also where the health savings account deduction goes. And that's it. They're good to go. What that does mean is they don't deduct it on their Schedule C, on the Schedule C part of their tax return. S corporations follow something similar. The S corporation owners are going to eventually deduct it here, but for their S corporations, they have to kind of jump through some hoops. It's a little bit trickier. There's rules on what you can deduct and kind of how. This lesson's going to give you some of the very simple processes to follow, and these rules that I'm going to give you are going to work on about 95% of your clients. About 95% of your clients. The other 5% are going to require some extra effort. I'm going to show you how to identify those situations that do require this. Sometimes it means you're going to have to do some research on your own. It may require that you place a phone call or a chat to your new tax department, right? Hint, hint, that's us at Halon. We're here to help you with these kind of things. So I'm going to show you how to handle all of that. Let me also say this. Many businesses don't have health insurance, meaning maybe the spouse has a plan through their work where the entire family is covered by health insurance. Many business owners will forego health insurance, having nothing to do with the tax implications of it, but just having to do with they can't afford it, the penalties, and some of the penalties are going away now, but there are lots of reasons why business owners won't have it. Out of 400 clients at our firm, I bet we only manage this kind of thing for 50 of them. So that gives you kind of a percentage of, how many are really doing this, maybe 12, 15% in our business, but it may be more for yours. And I can tell you this, as businesses get larger, this becomes more of an issue, right? So in the larger S corporations, you'll definitely have to watch it. And let me show you kind of the workflow. I call it a workflow that we're going to use if the owner of your S corporation has a health insurance plan through the company. Now, there are two different kinds of health insurance. One's called a group plan. They may also have a personal plan that they purchase in their own name, and I'm going to go over that here later. But it doesn't matter. Normally, if the business, does not have employees outside of the owners, you're not going to see group plans, right? You're not going to see group plans because they're the only ones on it. And many states won't allow a group plan to be issued to just owners and their spouses. So most of our Halon clients are going to be buying insurance themselves, like through the exchange or in their personal name. First, let me say this. It's very important that the business either pay that premium bill, directly to the insurance company, or reimburse the employee for having paid it on their own. If this does not happen, then this workflow that I'm showing you on the screen is not available to you. And the employee deducts all of their health insurance costs on their Schedule A, on their personal return. And that is a big no-no because they probably won't get any benefit because there's all kinds of limitations to whenever you get started on the itemized deduction schedule, the Schedule A. So we need the business to either pay the bill directly or reimburse the employee. Now, let's say that the business has paid the bill. The next piece of this is grossing up the payroll. So the payroll of the officer or the employee that is a 2% or greater shareholder gets grossed up for that amount. Now, if the plan is non-discriminatory, then there is no FICA that they pay on the gross up on their W-2 wages. Otherwise, they do pay FICA. I'm going to get into non-discriminatory versus discriminatory here later, but just know as far as the workflow goes, when you're grossing up someone's payroll, it depends on whether they're discriminating in their plan and how the business reimburses people or pays for health insurance, or if they're not discriminating. Last, the last part of the workflow is the shareholder gets to deduct the amount on their 1040. That's that screen I showed you just a second ago. Now, the net effect is this. So let's take a look at what's really happening here. There's 3 stages, right? First, the S-corp is paying the insurance. They can pay it directly, they can reimburse the employee, and they deduct the cost on the books as wages, as compensation. I'm going to show you how to do some of that here in a second. Then, after it deducts it, it grosses up the same employee for the same amount on their payroll. So kind of the net effect of this, right, is that they got a deduction, but then they also had to take it as income. So the net effect is almost zero here. And then on the 1040, they get to deduct it again. So it goes deduction, gross up, deduction. Goofy, right? I have no idea why we have to do it this way, but the IRS says this is what they want to see. I would much rather it be either the business deducted it here, and we don't mess around with any of this nonsense, right? Or if the business doesn't deduct it here, we just deduct it on the 1040. But you can't do that. If you don't deduct it and gross up, you can't deduct it on the 1040. And if you just deduct it here and don't gross up the payroll, the IRS can disallow this deduction. So you have to do all 3. You have to write it off through the S-corp, then gross up their payroll, then deduct it on their 1040. You're not going to be doing their 1040, so you just have to make sure that they know, hey, go deduct it on your 1040. Most personal income tax preparers know that if someone has health insurance on the W-2 or something that they're going to, and they're self-employed, that they're going to do something like that. Make sense? Now let me show you in QBO what some of this stuff looks like. So yeah, I want to kind of show you what we're going to do inside the actual bookkeeping to keep track of all this. So once the business reimburses the employee, the bookkeeping kind of gets a little bit tricky too. This is because what we want to do is show the expense as compensation, yet in QBO terms, that's not exactly easy. So this has to be a 2-step process, and really, it's kind of counterintuitive. So I want to make sure you understand what my process is. Now, you could do something like this a little differently if you wanted to. I think Halon would pick it up just fine, but I want to show you what my process is because I've fiddled around with several different kinds, and I think this is the best. First, we're going to be looking at the left side screen here. When you reimburse or pay the insurance bill, right? So Blue Cross sends the employee owner a bill, and it's to their personal name. He or she hands the bill to whoever pays the bills for the company, which may be the same person, and you've got to cut a check to Blue Cross, right? you are going to book that expense, or the way that I do it, to officer compensation health insurance, right? Many people would say, well, shouldn't we put that to insurance, that kind of thing? No, because in the S corporation's eyes, this wasn't really paying for their insurance. What this really was providing compensation to them in the form of paying an expense on their behalf. Okay? Now, you're still going to write it off at the S corporation level, but it's going to be written off as officer compensation health insurance. Now, notice here, I've got officer compensation. This is where the regular pay for the officer goes. And then I've got officer compensation health insurance. Eventually, on the tax return, and what Halon's going to do is it's going to net these two things together. But the reason this is important is at the end of the year, you can kind of true up and make sure that whatever is in this health insurance bucket, should be 12 payments, right? If it's being paid monthly, is also what is going to translate over to the W-2 side of things, right? So we've got two separate accounts. Now that you've paid the insurance company, the payroll needs to be grossed up. Now, different payroll companies do this different ways. So you need to contact them and make sure you have it done the right way. If you have a non-discriminatory plan, meaning everyone's included, always remember this, non-discriminatory good, okay? Because you're not discriminating against any of your employees or anyone else who works there. You don't have to pay FICA on the gross up. You still have to pay regular income tax, but why is this great? If you don't have to pay FICA on your health insurance gross up here, this counts towards your officer compensation minimums, but you don't have to pay the FICA, which means you don't have to pay the self-employment tax, which is kind of the whole point of the part of the tax savings of the S corporation, right? So you want a non-discriminatory plan if you can, and I'm going to define that in the next slide. If you have a discriminatory plan, meaning the S corporation reimburses the owners but doesn't reimburse any of the employees or pay health insurance for the employees, you still do it the same way, but FICA has to be paid. There's no exemption from the IRS on the FICA. Okay? And I'm showing over here what it kind of looks like in Patriot whenever you're doing, S-corp owner health insurance taxable, and whether it's FICA taxable or not is important. You got to make sure you're setting this thing up right in whatever payroll system that you're using. Then your books you need to make sure that your books tie, as your payroll expense is now the combination of this health insurance and the officer's compensation. So your W-2 needs to equal both of these things. Keep that in sync and try and keep it set up to where it runs each month. Maybe set up a journal entry or some kind of memorized transaction so that you're not forgetting. Especially if the client pays this personally and you're then reimbursing them later and you're not actually paying the bill directly from the S corporation, because that's allowed. Remember, that's allowed. But it's easy to forget what this transaction is and not have it on there if you're not reimbursing the employee on a regular basis. Maybe you're doing it every 60 days or something like that, but you're running payroll every 30 days. So make sure you have a system to where you're not forgetting this transaction. However, let's say you do forget it. Let's say you forget to do any of it until the end of the year. You can go into your payroll system, true it up with like a one-off payroll, right? That is just for S corporation health insurance, and then go into your books and make sure that ties out too. The point is, by the end of the year, before December 31st, these two things need to match. Now, if you are doing your financial review board meetings, this is definitely something that needs to be part of that, is checking whether this gross up is calculating correctly over to the books and vice versa. If you have employees and you're paying for a group plan or reimbursing them for insurance, then those amounts go to a different account. It goes to employee benefit expense. So anyone who's not an owner, it goes to employee benefit expense. They do not get grossed up on their payroll unless they are owners. So this is just for owners. If you've got employees that aren't owners that you're also paying health insurance on, then that just goes to employee benefit expense, and it's just an expense on the S-corp tax return, and that's it. And if the employees are paying, I'm going to get into Cafeteria 125 plans here in a second. If the employees are paying part of that, I'll show you what to do there too. Make sense? So this is important from the workflow perspective. Now, I said we'd talk about the discriminatory versus non-discriminatory plans, and there's nothing tricky here. As I said before, we will assume throughout this lesson that the business employs less than 50 people. So the ACA rules say that small businesses can have plans that discriminate. So most of your clients are going to have the choice here, meaning some employees can get health insurance paid or reimbursed and others do not. Now, if the only employees are the owners, like very small businesses that don't have other employees, this isn't an issue because you are non-discriminatory. You are reimbursing everyone that works there for health insurance if it's just owners, and you're doing all of the owners' health insurance in one way or another, reimbursing them for what they pay, or you have a group plan or whatever. So very small companies, you don't have to worry about this, but the moment you get employees, you do. Now, what this means if you're doing a discriminatory plan is that FICA has to be paid on the gross up for the owners. And if you're not discriminatory, as I said before, no FICA. And, we always need payroll in our S-corps, right? Everyone's going to be running payroll. So if you can get a non-discriminatory situation where, let's say you had a very small S-corporation, did $20,000, and the matrix says you need to do $3,000 worth of payroll at least or something, but they pay $6,000 in health insurance. Well, the health insurance gross up gets you over the hump, and you don't have to pay FICA on that at all. So in that case, that owner doesn't pay any self-employment tax. Does that make sense? So this plus, doing things in the accountable plan sometimes can be a really good thing from a FICA perspective, because you could get to your payroll minimums without ever having to run any legitimate FICA taxable payroll, right? So when do you really need to worry about this? As I said before, it's when people have employees, and they're doing health insurance through the business. So if it's a single owner business, which many of your Halon clients are going to be, this isn't an issue. You don't need to really worry about it. If they have employees, you do. And I wanted to talk a little bit about group plan versus individual. Group health plans are easy to spot. They really are. They're usually in the business name, and it is very rare to see an insurance plan in the business name that is not group insurance. Group insurance used to be a really big deal because group plans were the only type of health insurance that didn't have pre-existing conditions. So everybody wanted, especially if they had pre-existing conditions or spouses did or kids did, everybody wanted on group plans. They were more expensive, but that was the only way to get admitted into a health plan at all, because individual plans could still turn you away. Right now, that's kind of gone away, which is individual plans can't have pre-existing conditions, although now that legislation is getting rid of the ACA, we may start seeing plans turning away people again and going back to kind of the old ways. But for now, that's not an issue. So just know that group plans are usually in the business name. Individual plans are usually in the individual's name. And for now, they're very much used interchangeably. So it doesn't matter for our owners whether it's a group plan or an individual plan. They still have to do this workflow, which is deduct, gross up, deduct on personal tax return. Your owners are always going to have the same workflow. Same for employees, regardless of if they are on a group plan or if they're being reimbursed for their insurance that they got personally. They're deducted as employee benefit expense, and at least for the portion that the employer pays. If you have a Cafeteria 125 plan and the employees are paying part of their health insurance in a group plan from their W-2 income, then a portion of that premium they pay into the plan, and they also don't have to pay tax on that. They get to do that pre-tax from their compensation. Let me talk a little bit more about Cafeteria plans. I don't think you're going to have a ton of them, but let me kind of move on to the next slide here. So Cafeteria 125 plans is really just this. It's an employee benefit that allows the employees to take advantage of Section 125 of the Internal Revenue Code. Basically, that code says that they can pay certain expenses that are that they need to pay to the employer or through the employer on a pre-tax basis. So before they have to pay federal income taxes on it, which is kind of like getting a deduction for it, right? It reduces their taxable income and increases their take-home pay. So you can use these for health insurance. You can use them for flexible spending accounts and other things. However, our S-corp owners can't use them. So employees can use them, but the S-corp owners can't use them. And so for our normal Halon group, I hardly ever see these because the owner can't use them. I see them a lot more in big corporate structures, but for the small businesses, unless they really do have a group health plan and they've got employees that are paying into it, you just don't see a whole lot of it. However, again, different circumstances, meaning employees paying for health insurance partially from the employer, partially on their own, you're going to need to make sure clients think about a 125 plan. Here's the danger. Many of your clients will say, and tax accountants aren't good at picking this up either. This is a bookkeeper issue, I assure you. When clients want to have their employees do pre-tax deductions, you need to make sure that they have found a Cafeteria 125 plan, a provider of some kind, written up an actual plan, and are abiding by it. There isn't a law that says you can just do it without doing anything. You have to have a plan, and there's providers out there that do Cafeteria 125s that will show you how to do it. They're not super costly, but you need to be reminding your clients, okay, you need to set that up. We can't just say, oh yeah, they can do it. No problem. Well, I'll just start running it through the payroll. And I can't tell you how many clients and accountants are doing that. We always think, well, that's a tax thing, right? Isn't the tax accountant in charge of it? Of course not. They could care less what is going on with some of these payroll type items. So you've got to make sure that you know the law on this. And the law is that if you have a situation where employees are paying a part of their premiums pre-tax, you need to have a Cafeteria 125 plan. And let me talk about health savings accounts real quick. So this is another nice benefit for employees or owners. The treatment is different for each of them. First, HSAs, health savings accounts, are accounts where you can use the funds. You can contribute money to an account to pay for qualifying medical expenses. Okay, it's like a checking account that you're funding and then paying medical expenses from it. If the employer, and it's got tax benefits to it. So if the employer puts money into an employee's account, the employer takes a deduction for what it gave, and you put that to employee benefit expense, and the employee doesn't have to pay tax on it. So it's a win-win for everybody, right? They then take that money and spend it on qualified, medical expenses. Easy peasy for employees. For S-corp owners, it's a little different. The S-corp owner cannot make a contribution from the business to theirs and get a deduction. Instead, the owner does all of this personally. So they take after-tax money, they put it into the HSA, and then they can spend it. And they take a deduction when they put it into the account, but it's on their personal tax return. Here's the problem. They still pay FICA tax on it because the only way to get that money into them personally, for the most part, as opposed to like an employee, is they're having to still pay themselves salary. And so they aren't getting out of the FICA. But it's still a great option to get out of the federal and state income taxes. So don't lead your clients away from doing this. Insurance is easy, but this is for other things like eyeglasses, I think, is a qualifying expense, and other costs, paying doctors or other things that insurance doesn't cover. You can still use this account to basically get a tax deduction for it. So these are very good things to have for your clients. They're paired with a high deductible health plan, and I've kind of put on the screen there a little bit about how they work. So health savings accounts are good, but they're treated differently, right? Employees, the business can take a deduction for whatever contributions it put in. For owners, over 2% S-corp owners, they have to do it all on the personal side of things and contribute money personally and then spend the money personally and take the deduction personally. And we're almost done. So there are a few things that I did not go over here that could end up being an issue someday. And this is kind of the part where you may need to do some more research or call us for some help on things. The first is something called a Section 105 plan. It's not really a benefit for S-corp owners, but could be for their employees, or if you have a partnership client. If you need help with them, let us know. 105 plans are again kind of a reimbursement plan and a way to handle medical costs and get a deduction for them, but they're not nearly as used in S corporations as they are in like partnerships and things like that. Second, there's the supplemental insurances like vision, dental, life insurance, and more. All have different rules. So if you have clients going down the road of doing supplemental insurances of some kind, everything from AFLAC to vision insurance, that kind of thing, you're going to need to do some research on it and figure out what the deductibility of each of those are. And if you get stuck, call us at Halon, chat with us at Halon, and we're going to help you try and figure it out too. Finally, and this is really important, so listen to this. There's going to be moments where clients are trying to decide if they should offer insurance to their employees. And they're going to want what they wouldn't call it this, but I'm calling it this. They're going to want some kind of tax planning session, right? Where they say, well, how much could we save if we offer it to the clients, and what will our taxes be? This is tax planning. This is not part of your core job. This is not helping them figure out how to book the insurance that they spent money on. This is actual tax planning. So make sure that you tie this stuff back to a tax planning package. So if they come to you and say, how much do you think we could save? What do you think we could do here? How much is this going to cost us? Say, hey, I'd love to help you with it, but we need to run tax projections to do this. We probably need to get the CPA tax team involved, and that's all part of the tax planning package. So I need you to pick that up going forward here. Doing this work is not part of the core package. So I just want to make sure there's a good point on if you're helping them figure out whether they should do these things or not. This is all tax planning, right? Now, if they don't need help figuring out if they should do it and they just do it, right? And they're trying to figure out how to book it. That's part of our job. That's bookkeeping, right? Just like any other expense they would have. We can take a look at what they did and then book it the right way, make sure they're doing things grossed up for payroll. I know some of you are going to be like, well, if they have this whole thing where we got to gross up payroll, are we charging extra for that? No, stop that. Stop thinking that way. You're getting plenty of money. If you're charging $100 for payroll a month plus $6 an employee like what I do, you're getting paid plenty to do a little gross up every once in a while. But the bigger piece here is if they want planning on if they should do it or not, that's a gateway to getting into that tax planning package. So make sure you get paid for that work. Okay, let's jump into our action plan. So a few things here. Understand that the S-corp owners are always going to get different treatment from non-owner employees when it comes to insurance, right? The owners just have this goofy workflow that has to be done versus employees that are non-owners. Use a second officer compensation account, that officer compensation - health insurance account to manage payments and tie them out to the W-2. If a plan is non-discriminatory, that's good, meaning they don't have to pay FICA on the W-2 gross up. Group plans and individual plans, treated the same way. They're basically the same thing, except they just are in a different name. The way that the S-corp treats them is the same. Use health savings accounts for other expenses outside of the insurance, and get Halon help if you have a situation that is outside the norm, right? If you really need to think of Halon as your tax department, not just a tax return preparation service, because the vision for this is, yes, we do tax returns. Yes, we bill based on tax returns, just like the outside world does. But we are intending to support you in anything having to do with that client. Once we do their tax return, anything having to do with that client for that year, we need to be helping you there. So get help from us if you need to. And you're done. You're done. You don't have to listen to any more of my videos. I hope you enjoyed them. And I do have a short video for you after this that's going to show you how to apply to become a Halon financial accountant. So the next steps, now that you've completed all of your courses, how to actually become credentialed and get access to the software. So make sure your coursework is at 100%, and then watch that video, and I'm going to show you how to where to go to get your credential applied for, and all of the processes that we go through to actually grant you access to the software and make you a Halon financial accountant. Thank you. Thank you for taking the time to complete this. I hope you enjoyed it, and all of us here we're really looking forward to working with you and with your clients. So now that you're done and you're going to apply for your credential, let us do some work for you. Let this pay off for you. If you have questions, come to us with them, because we want to help you. Your success is a huge, huge part of our success, right? If you're not successful doing this, we're not going to be successful. So we're all on a team here. So from all of us at Halon, thank you for watching. Thank you for doing the Halon University. And we will see you in the software. We'll see you on the phone, and we can't wait to work with you. All the best, and take care.